Just because you're the highest bid on a business, you may not win it.
Why did you leave investment banking to make bread?
I think it's something I think most weeks a lot about.
Matt Cimon is a co-founder of Bond Bakery and president of Portofino, and he's building a $1 billion portfolio of bakeries.
One of those things that you look 10 years out and you go, is that where I want to be?
Matt, thank you so much for being here.
Thanks for coming to the island. Thanks for having me.
We actually share a lot of common threads in our past, and I would say that a lot of people looking at our previous lives, a career in something like investment banking or management consulting is a bit of a dream job, but that clearly wasn't the case for me and definitely not for you. So I'd love to hear more about why you decided to leave that prestigious career.
It was actually a dream job for me. I'd say it's my first dream job. I spent about 3 years in investment banking, and one of those things that you look 10 years out and you go, is that where I want to be? And you see the folks doing what they're doing, and I chose not to do that. So I actually left IB without a job, and we were moving out to Vancouver.
That's risky.
Yeah.
From a personal life standpoint.
It didn't feel risky at the time. It felt right.
Coming out west with no job, what were the circumstances that led you into ultimately a bakery business?
Yeah, I did not picture myself in the bakery business, I gotta say, I must admit. So I was spending the holidays and I received this LinkedIn message from someone who I met, my now partner, Nick. And he messaged me saying something like, hey, I heard you left investment banking. I'm out on my own. I'm looking at businesses somewhat in the manufacturing space, but across a variety of different industries. And there's this really interesting one on the West Coast, but I'm not going to look at it if I don't have someone who can go potentially run it if we actually acquire it. And I said, hey, that sounds good. I'm not doing anything. Let's try it out. Let's go for it. I remember I went to Staples and bought the first laptop I bought in like years. I always had like a work laptop.
Did you also get the "that was easy" button?
I should have, although it wouldn't have proved true in the years to come. And so I started modeling the deal over Christmas, and then in January I moved to the West Coast. And for the next 6 months, we worked on the deal, raised the capital, raised the financing. It was a competitive process, and so it was no certainty that we were even going to win the deal.
A lot of people may never interact with a deal or a deal process in their entire lives. So I actually want to break it down for people. Was their process being run? Who ran it? Who were the other stakeholders? What were the steps that led to you actually closing this deal?
So most deals, particularly if they're a marketed deal, which means if there's an accounting firm or investment bank who are helping broker and sell the business, you'll get an initial document, usually it's a 1 or 2 pager, that gives you some baseline information about the company. Not too much, but enough to give you a sense if it's something you might want to pursue. From there, you engage with the firm that's marketing the business, and they will decide if you're worthy to be in the process or not. And of course, if you're an investment fund or a professional investor, they will almost automatically let you in. If you're a no-name who doesn't have a lot of money or capital, it's a little bit more of a process. Then you'll sign a non-disclosure agreement, NDA, and you'll get what most people call a CIM, Confidential Information Memorandum. And that'll give you a pretty detailed look into the business. And so those can be anywhere from, say, 15 pages, and I've seen some up to 50 pages. So it'll talk about the company, the history, the financials, the strategy, why the company's selling, recent events, what the forecast is for the future. And then you can use that information to get a little bit more detailed on the investment thesis and a little bit more detailed on the modeling of the business. Does this make sense from a financial perspective? In addition to that, you'll get access to what's called a data room, which will have very detailed information about the company's financials, about its real asset holdings, whether they're real estate or machinery, more information about the company's staff and human resources. And so the data room is really where you dig in and spend hours and hours combing through this information to validate some of the things you're thinking about. All the while, this is happening over a period of weeks, you're given an opportunity to submit a bid by a deadline, just like buying a house as an example. And so you submit your first bid formally, and usually they'll, depending on how large the process is, they'll let anywhere from 3, 5, even 10 people into the next round. In this case, when we were buying Portofino, it was a competitive process. So there's multiple interested parties in the business. We don't really know who they were. They don't tell you. Some of them may have been financial buyers, like private equity companies. Some of them may have been strategic buyers, like grocery stores or other commercial bakeries. who were interested in it, but we did know that once we submitted our first bid, we got through the next round, and we knew that 3 or 4 other participants had also advanced. They'll give you that information to create a bit of deal tension for the final round. And then in the second phase of this marketing offering, you typically get site tours. So you get to go see the actual operations. You get meetings with management to meet the team, clarify some of the questions, and clarify your thesis on the business. And then you get one last chance, usually, to submit a final bid.
And the common phrase that I always heard was, put your best foot forward.
That's right. Yeah, put your best foot forward. It really makes sense for some of these other bidders because they're strategically aligned with the business. And so just like similar to buying a house, the brokers will do their job and try to edge you up on the business, which sometimes it is good advice to listen to, and other times they're just doing their job a little bit. Just because you're the highest bid on a business, you may not win it, as you know. So there's lots of factors that play into that. If there's an earn-out structure or some kind of deal structure in which is more attractive to the seller than the other, they might actually choose to take a lower bid because that maximizes their value. Oftentimes the highest bidder will win, but there are some other deal-specific factors to consider. In this deal, we actually tied the highest bid, and we got the news that the management team wanted to proceed with our group.
You must have been ecstatic because so much work and so much of your motion goes behind some of these deals. So when you got that phone call or email, whatever the case may be, when did it actually feel real for you that your life has now changed entirely to now you are going to be owning and running a bakery business?
So we worked on the deal for 6 months, and then we received that phone call after many other phone calls. But that was the phone call saying, "You won the business," and it was this silence on the phone, almost like, "Oh, this is happening." The second time it felt real, I can remember, was the first day I walked into the business and meeting the staff, the employees, the management team. It hit me.
This is happening.
This is happening. We're doing it. I remember that pressure and that excitement was when it really hit me.
This is your first operational role. Where did you get the confidence to be able to walk into that room and work at that capacity?
One of the things I took from investment banking was being in the room with these people who are running businesses, and obviously also people advising those people who are running the businesses, and seeing that it was possible, and seeing that they were just people too. And I think that gave me the confidence and perspective coming in of what we really wanted to accomplish. There was definitely a little bit of muscle memory that hadn't been built yet from managing people and speaking with people who are actually running a business on a daily basis. And so I'd say it probably took a good 6 to 9 months feeling really comfortable with the idea of walking into the business every single day and being like, okay, here's what we're pushing forward. Here's what we're doing strategically. It was just a completely different skill set from what I experienced in finance.
And did you have a strong support network around you that was able to help guide you through this process, or a lot of it was just learning through experience?
I think a lot of it was learning through experience and keeping an open mind and asking a lot of questions and not being afraid to not be the expert in the room. And so I tried to surround myself with a few key advisors, which I thought was really helpful.
And throughout these few months and bringing on new people, what was the transition like? How did the team and the operations evolve?
The business had been run for 13 years before we purchased it. It had become the largest bakery on Vancouver Island, commercial bakery, just bakery generally. They'd built the brand and the bread and the quality over the years. They'd done a terrific job at that. And so it was founder run. The founder was still there, close to retirement, and still very much a family who owned it. They did a terrific job growing the business and getting to where it needed to be for that stage. But what they had not done is for the next phase of growth really focused on the structure of the business and how can we be sustainable with a company twice the size, 3 times the size. A lot of the transition work was trying to take exactly what they had done in terms of product quality and brand, and then putting a structure underneath it so that we didn't get in our way. We didn't keep tripping over ourselves, even just starting with a basic organizational structure, employment contracts, some of the basic.
I mean, a lot of businesses don't necessarily foresee how big they might actually grow and don't have that foundation or structures and processes in place. So I think identifying that early on probably has allowed for a lot of growth over the last few years. I imagine when you're going through this deal process, you had a certain set of assumptions, you had forecasts, you had an idea of where this was going to grow, but reality doesn't necessarily reflect that. And so can you speak to any sort of unforeseen challenges that have come up?
We purchased the business in June of 2019, and the first crisis we faced, really, being transparent, was a crisis of quality. Obviously, many companies go through quality issues when they grow top line, because they have to figure out how to produce the same quality of product while producing a lot more of it. We weren't really facing that. The crisis of quality that we were facing was actually due to our structure and our processes, so quality control. In the first few months of owning the business, we actually had 2 official recalls, and the recalls are done by a government agency, the CFIA, and they're big deals in the food industry. You do not want a recall. That's what everyone tries to avoid, right? We go through a ton of stuff just to avoid any type of recall. One, because of making sure our customers are safe, but also because of the brand reputation, the cost, and everything in between. And ours were small recalls. It was only a few hundred units of some really small pastry items that we had, but we had mislabeled them by hand. And so because we didn't have a comprehensive food safety program at the time, one of our largest customers came to us and said, look, we want to support you, but you've had 2 official recalls. We have to give you a deadline to have a more comprehensive food safety program, which is quite a comprehensive program, in place within 6 months. And if we didn't hit that mark on the wall 6 months in the future, they were going to drop us as a customer.
Wow.
And so they were probably 20 to 30% at the time of our total sales. So it would have been a devastating blow to the company. 3 months later, COVID hit. And now we were managing a manufacturing business, myself for the first time, within a pandemic environment. And so our world is turned upside down. We're figuring out how to process food, keep our staff safe, and still be a business in this time of extreme uncertainty. We were trying to keep our heads above water, but in the background, we also had this massive target for food safety that we had to hit. Mm-hmm. But with putting the right people in place and making our priorities really clear internally, as a leader, you really have to be super clear, ultra clear on what we're striving towards. You have to do that in the best of times when there's a crisis situation, the turnaround mode. You really have to be super clear to get everybody rowing in the same direction.
It really, really amplifies in those times. Mm-hmm. And when you're talking about everyone rowing in the same direction, working towards the same goal, you've mentioned bringing out outside advisors as well into the business. I imagine the food safety program was not an internal know-how. How do you find the balance between the people who've been with the business for potentially even 13 years to bringing in fresh eyes?
You know, I think I've heard from different business leaders on different sides of the spectrum. Some say we always promote internally, and that's the way it's going to be because that's what we believe in, supporting internally. And others say, look, if you have a problem that you can't solve internally, look outside and bring an expert in, bring that knowledge into the business. And I think I'm somewhere in between. It just depends on the situation. I think it also depends on the speed in which you need things to be done. And so this food safety example, the food safety program, we used a combination of internal know-how, bringing in a couple new senior managers who really knew what they were doing, and then we used external consultants.
During your times of crisis and during COVID, for example, you don't have the luxury to go through all the analysis to actually determine what the next step is or what you have to do. You have to react in a lot of certain ways. So from your perspective as a leader, how do you balance taking risks and doing the analysis before making a decision?
I think it's something I think most weeks a lot about is the actual decision-making process, maybe too much sometimes. And I think it really depends on the type of decision and how big of an impact it can have on the business. And so if something could be a catastrophic decision to the business, one way or the other, there needs to be some rigor behind the decision. I don't want to use my gut feeling just on this is the right way to go and this is what we're going. And so to me, usually that will involve a combination of analysis, speaking with all levels within the organization. So those are the bigger decisions. I think on the smaller decisions, being decisive is more important. You don't want to be the bottleneck, at least that's what I feel. You don't want to be the bottleneck in terms of some of these day-to-day decisions. And so it's okay to make a mistake and take small to medium-sized risks on those ones and being a little bit quicker. We'll get 50 to 75% of the way there in terms of our research, a little bit of analysis, and then we'll make the decision. We don't have to get 100% of the way there because if we're wrong, we can always go back and adjust it.
I love that. And hopefully that relieves some pressure off of those individual decisions as well.
It does. Yeah, it definitely does. I think at the beginning it feels weird
Yeah.
I'm not sure if it's a fear of making the wrong decision, but in finance, you're programmed to make the right decision.
It's so funny how our perspective about what a mistake is and how that's changed over time.
Can definitely relate. Going from a very structured finance environment to a very non-structured operating environment is a very different state of mind. And so I had to come to learn that very quickly. And one of the challenging things that I find is, what do you let go and what do you really tackle? And I think that's really looking through the lens of a leader and the lens of operating a business. Is there are some things that you will not get to. What are some of the bigger things you need to address? And a lot of the smaller things you'll find, at least we've found, are symptomatic of the bigger stuff. And so understanding that you need to keep yourself and your teams and the company, of course, to a high standard, but perfection isn't that standard.
When you think about the finances, whether it be fundraising, capital allocation, budget, how have you been able to navigate those?
I think I really value the foundation I have. I think where it's really become impactful in the business is in the budgeting process. Having a really detailed budget and truly understanding really, first and foremost, that COGS function, the cost of goods sold, your people, your materials, and your shipping. And every business defines it a little bit differently. But understanding how those factors interact with each other and how they interact with sales has been really helpful, because we found that some of the decisions we were making were actually dilutive, were actually hurting margins. And so we were able to quickly identify that, make different decisions, and expand the business profitably. And so being able to forecast out margins and sales a little bit more in detail, I think has been really helpful. One thing that it's become very apparent, which I didn't have a full appreciation for, is the need for lots of working capital as you grow. And so you might be growing sales and you might be growing them profitably, great. But if your business is growing at a 25 or 50% rate year over year, you have to constantly invest in your working capital, obviously. And so that means your people costs, your materials, your shipping costs, and all of that before you get paid on these higher sales. And so something that we've gotten sharper on since the early days was that cycle of if we are scaling the business at this certain clip, what does that mean from a funding perspective? Sometimes it funds itself if you're a strong enough working capital position, but if your business is going to be growing and you have to manufacture, you're going to need some money up front to make sure you have enough inventory.
And so you're thinking about scaling and growing this business. It seems like it's grown and changed quite a bit, even over the last few years. Are you able to shed some light as to how big you foresee this business actually growing?
Sure. So I operate a Portofino bakery, which was our first investment. Since then, our investment group, which is called Bond Bakery Brands, we've since purchased 4 other bakery companies since Portofino. And we use the term bakery pretty broadly. Portofino is the highest quality commercial artisan bread you'll ever find, whereas our other companies, like our company Pace Processing, does a lot of cake business and a lot of frozen pizza business. And so that's also bakery to us. And so they're all a little bit different. Our goal is to grow that platform to $1 billion platform. It's about 9 or 10 times the size of where we are today. So we still think we're early days, but we think we have a model and an approach that can really bring us a line of sight into getting to that goal within the next 5 to 10 years.
Interesting. And do any of these assets interact with each other, or they're largely standalone?
Largely standalone, but we've been finding ways in which to bring them together, whether it's operationally, like making sure that our procurement teams are working together and making sure that our businesses are getting the best price for materials. And sometimes we found that product categories that one business can no longer do, the other business can profitably do.
Got it. Tell me more about the thinking behind growing the assets you currently have versus growth through further acquisitions in the future.
Yeah, and they're conversations that we continue to have. We have some really attractive uses of capital within the portfolio, within the operating companies. And so we're a corporation, so we're not an investment fund like you might think a private equity fund. We're actually a corporation, and so we view the pie as a whole. And so when one company internally needs capital for a facility or machinery, it comes out of the whole pot. And so that's the perspective that we take. And so we have some really attractive opportunities internally that we're looking at, but there's also some other opportunities that externally might be able to make a meaningful contribution to how large the company is. So as an example, there's some opportunities that we could double the size of bond just by acquiring a bakery company, whether it's in Canada or United States. And so it's always a decision that I think we'll put a lot of emphasis on. Deployment of capital is an area that we feel we can be pretty sharp on overall, given our backgrounds. We're three bankers, so not only am I an ex-investment banker, my two partners, Cam and Nick, are also ex-investment bankers, and so a lot of our conversation internally actually centers around what you might call capital allocation.
And when you're assessing these opportunities across the very loosely termed bakery industry,
Sure.
What does it need to be doing right to make it attractive?
Some of the things that have stood out to us is how much innovation can actually be done in the bakery space. And so the bakery industry as a whole, both in Canada and the US, is there's a handful of companies that make up the large majority of sales. And so it's highly concentrated at the top. Probably 70 to 80% of total sales in the industry are made up by 5 or 6 companies overall. But below that is a lot of fragmentation and a lot of companies that are doing some really interesting stuff on the innovation side of things, whether that's new ways of putting plants into crackers or keto or anything in between. And some of these businesses can grow really large. And so I think by being innovative, by showing that you're growing a niche category that doesn't already exist or is just beginning to grow really quickly, is a good way of standing out.
And so looking at Portofino, back to your first asset in this portfolio, have you revisited the financial models that you initially made doing the deal?
Big time.
And how does reality compare?
I think we were directionally correct, and I think we, at least myself, had a lot to learn on the mechanics of operations and how things flow. And I think there was also some things that you learn within the environment that you can't control as a small to medium-sized company. And so in an inflationary environment, who wins out? Usually the large companies, because they have the say in the marketplace. Small to medium-sized companies have a tough time. And so when you enter a highly inflationary environment, your inputs can get all wacky, your margins can go crazy for a little bit. I think looking back, the vision that we had and the strategy was right, and we still believe in it. And I think we can still take it to where we thought we could take it. We've gotten sharper on being more realistic with some of our operational forecasts. I think if we were to redo it, we probably would have had less optimistic forecasts in the first couple years and probably more aggressive forecasts in the later years. It's something internally that we call the J curve that you go through. And some people call it the valley of death. I don't like that term, but basically a period of time in which you're structuring the business for a lot of growth, but your results in the short term are going to be affected because you're scaling and you're building that foundation to scale. And we did go through a little bit of that, but thankfully we're on the other side of it.
Thankfully. Yeah. From a personal standpoint, what have been some valuable lessons that you've learned as a manager in an operating business?
I think learning to trust your gut and your instinct, even if you haven't run an operating business before, these things need to be validated for sure. You just don't make gut decisions here and there. But when something doesn't seem right or something seems like it could be done better, you're probably right.
A lot of leaders, they have that intuition that they need to listen to, and that comes from having that sense and being able to bridge many different ideas. But I also think it comes through experience and pattern recognition and getting exposure to different areas you might not have had before.
When I think sometimes you can't even, it's hard to describe. It's hard to put into words what you feel is off sometimes.
Yeah. Do you miss leaving capital markets?
I don't think I miss it, no. I don't miss it. I don't miss it, and I look fondly upon those years. It was something I really wanted to do. It was a big goal of mine. And I knew there was probably a good chance that I wasn't going to spend 10 years in capital markets, but I wanted to spend enough time to get that exposure overall. I still think there's a chance I could go back to capital markets at some point. My philosophy is that it's a long life, hopefully, and it's a long career. And I'm not ruling anything out. I'm having a great time operating a business and building this platform, but I want to be realistic as well. But I don't regret leaving it.
I think being open to where life might take you is also important. You can't plan everything.
I forget who said it. I think it may have been Sheryl Sandberg. I think she said something about a career being like a jungle gym, but sometimes there's no straight path. I think it's very rare, although not impossible. I think for most people, it's a bit of a jungle gym.
And I think a lot of people who might be in investment banking right now or capital markets will look at your path and be inspired by how you've been able to navigate it so elegantly. And so what advice would you give people who are looking to take on a more entrepreneurial or operational role?
The connections that you make, you may not appreciate at the time, and they may be short connections in the sense that you may not spend a lot of time with those people, but sometimes they can make all the difference. And that's how it worked out for me. Showing up your best in whatever you're doing will give people that idea that this person's lights on, that this person wants to do well. And when something random comes up, like buying a bakery business on an island in Canada, comes up, they'll think of you. And they may not, but it gives you a chance to have those conversations. And so I think not something that I admittedly always did the best of, but I think networking, meeting a lot of people, being interested in people and showing up your best every day, whether it's in capital markets or anywhere, probably gives you the best chance of having some luck in the future.
I remember when you're in school and they tell you how to network, and it's always funneled to these very specific events. You do your wine and cheese events,
That's
you
right.
pass your business cards, and in life and in career, networking looks very different. It's building those relationships and how do you foster them over time, and how do you seek those out?
Yeah, and it's effort.
Yeah.
It takes time, especially when you're in a bit of a pressure cooker environment like investment banking. It's tough to find that time, but I think it can make all the difference.
Absolutely. Yeah. Well, Matt, I would love to continue chatting with you, but I know you're really busy, so I do want to end with a few speed round questions.
Okay, let's do it.
What is the worst piece of advice that you've gotten since joining Portofino and One Bakery Brands?
Okay, the worst piece of advice could be from anyone.
Yes, worst.
I'm going to go back to, if I was told this a lot, if it ain't broke, don't fix it. I think it's well-intentioned, that advice, but I think when you're in a growing business, it's bad advice, because I think you constantly have to be judging your structure and your strategy for the size and the state of your business today and the future. And if you're growing at a very fast pace, then you have to constantly be reevaluating how you're doing things. And so what might not be broke today will be very broken 6 months from now.
And I feel it's a common one that people hear. So if you're looking to innovate, rethinking what is already there and what has already been done is necessary.
I think so.
What is your favorite Portofino product that's not the sourdough loaf?
I wish we had 2 sourdough loaves so I can say, second sourdough loaf. I like the peasant loaf. And it's like, I tell people, I think it's like a good tomato sauce. It's so simple, right? But when it's done correctly, you can't go back.
Oh, I love that.
What's your favorite product?
Sourdough.
Okay.
It's phenomenal. I think the quality of the ingredients really shine through.
Yeah, it's something we try to do.
Well, this was really fun. Thank you for coming and sharing and being so open about your journey from investment banker to bakery and to who knows. I'm excited to continue following your journey.
Thank you. Thanks for having me. Thanks for coming, and it's been fun.